Morning, everyone. I think everyone is, we've all been waiting for this webinar to start, so maybe we can just kickstart it now. Before we begin, I'd like to thank everyone for attending this webinar that we have lined up for you. My name is Christine Boro and I shall be the moderator for the day. Kindly allow me to have my video off throughout the entire webinar session, but my colleagues will have their videos on even as they take us through the presentation. As you can see in your screens, the topic of today will be non-fungible tokens, commonly known as NFTs. And I believe the team is well prepared to educate us on this theme. Without further ado, I can let the Arima team introduce themselves. And you can probably start off for us.
Oh, thank you so much. My name is Joseph. I'm a private wealth advisor at Arima Fund. During this webinar, I'll be presenting. Thank you so much and feel most welcome.
Yeah, good morning. My name is Joseph Njuguna, Communications at Arima. I'm as well one of the presenters for today. Welcome to the webinar.
Good morning, members. My name is Kelvin Chalo, Account Assistant Arima.
Morning, members. My name is Wambuta Odiambo, and I work research analyst at Arima Fund. Thank you.
Good morning, members. My name is Sarah Wavinya, intern Arima. Thank you.
Okay, good morning, members. My name is Eric, part of Arima team committee. Thank you very much. Karibuni.
Thank you so much. That is the Arima team. That's the team behind the Arima Fund and also this beautiful presentation. I hope you learn as much as you can. Also, at the course of the presentation, feel free to ask questions on the chat box. We shall have a panel to engage with you as well as the Arima team who shall be able to interact with the questions. So we shall also give a chance for questions to be addressed towards the end in the case some have not been addressed on the chat box. Before we continue or get into the presentation, I'd like to introduce the panel that we have. We have David Mutisia from the investment team. Maybe David, you can say something.
Good morning, members. My name is David Mutisia. I'm Manager Investment Consulting at AXAP, and I'll be able to assist you with all the questions that might come up on advisory services. Thank you.
Thank you so much, David. Also, we have in absentia, Abed Murithi. He's the chairman of the governance committee. He would have loved to be here, but he sends his apologies for not being able to attend this meeting, this webinar. So we'll like to start, but first I'd probably just give a brief of our parent company as well as the subsidiaries that we have. Our parent company is Actuarial Services East Africa Limited. It's an actuarial consulting firm with over 2 decades of business visibility in the market. Some of the services that it does offer among many is IFRS 17 consulting services, life and general insurance consulting. We have pension fund as well as investment consulting services. Over the years, we have been able to, AXA has been able to birth a couple of subsidiary companies. One of them is Brooks Insurance Agencies. This is licensed by the IRA team as an independent insurance intermediary that offers both life and general insurance products. We also have our pension fund, Mwavuli Pension Fund. This is a multi-employer retirement scheme that allows employees of a participating employer to save towards their retirement. And lastly, we have Arima Fund, which is the team that is has organized this wonderful webinar for us today. It's a membership-based investment club that seeks to enable its members to achieve financial stability, security, and independence. So I think we can take it from there. I'll allow the the Arima team to take us through the webinar of today. Arima, you can, sorry, not Arima, Andewa, you can kickstart it for us. Also, before I give Andewa the chance to just start the presentation for us, a quick reminder in case of any questions that you may have at the course of the presentation, kindly feel free to engage with the team on the chat box. Thank you.
Thank you so much, Christy. And to my audience or to our audience, feel most welcome. First, allow me to begin with more about Arima Fund. because actually that's where we begin from in this webinar. So just a brief, as we can all see from the presentation, just a brief about Arima Fund. Arima Fund is a private member investment club that was established sometimes in 2014, and it came into partnership with AXAV, which is a leading consultant firm in Kenya, with the aim of enabling its members engage and seek out superior investment opportunities. So our vision basically as an investment partner is to be an investment partner of choice, basically for our members and their families. And the mission is basically to enable our members achieve what we call financial stability, independence, as well as security. And how do we do this basically in Arima Fund? This is achieved by providing that much needed access to unique and rewarding investment opportunities not easily accessible elsewhere. So basically what I'm saying is that the unique and tailor-made investment opportunities that I'm speaking about, you may really not find them elsewhere in the market except here at Arima Fund, which is a subsidiary of AXAV, as Christine has mentioned. Before 2014, we had the investor network. It is also advisable to talk about this. So Arima Fund, yes, established in 2014, but before then, it used to be called Investor Network. That is from 2008 to until we changed the name to Arima Fund Limited in 2014. So as we talk about Arima Fund, we have to talk about our purpose, which is to enrich and positively impact lives by providing that much needed access to investment, both for families and individuals, to basically impact, have an impact on the families, as well as create that social impact opportunities that various persons need in their investment journeys. Our focus as a team is basically our member focus in terms of vision. We also have integrity in terms of our vision, reliability, innovation, teamwork, and professionalism. All this helps us to achieve the mission and the vision, as well as the purpose that I've outlined before. Among the services that basically we offer at Arima Fund Limited includes, but not limited to, investment planning. Sometimes back we had a wealth management training on family wealth management. So that is also another key area in terms of service delivery, that is family wealth management, as well as personal financial planning. So these are among the services basically that we do offer as a team. To the next slide, why are we having this webinar? Because the topic is basically on NFTs, cryptocurrencies, as well as other investment opportunities that are available, or that basically we are always confronted with. The basket is wide, and I mentioned as part of our promise of enabling our members achieve that financial stability, security, as well as independence, there is always the aim to continuously equip our members with that much needed knowledge on various financial matters. And I talked about the various baskets available, basket A, B, C, among others, mention them. You realize that when you are confronted by this too much or too many baskets, it might become so difficult to really decide on where are you going to consume from, where are you going to invest your add and cash in. So in this situation, therefore you need to be equipped with that much needed knowledge on the available investment opportunities basically that we have in the market. And therefore that is one basic reason, one major reason that called for this webinar. So what are basically NFTs and cryptocurrencies? Very, very key, two things, NFTs and cryptocurrencies. I'll first talk about some key terms like the fungible. Basically in business, that means non-interchangeable. That is, something that cannot be traded or exchanged with another. Hence the name non-fungible tokens on one side and the cryptocurrency on the other side. Now, when I talk about non-fungible tokens, NFTs in short, and they are basically that emerging digital types of investments. That is in general, which are traded through digital means or platforms. and require one to have enough understanding on how they work. But allow me to go back slightly to talk about NFTs. Then on the other side, I'll also talk about cryptocurrencies. Now, NFTs, which are non-fungible tokens, are digital assets that represents a real life or a real world object, be it in music industry, be it in real estate industry, in gaming industry, name them. That digital asset, in other words, they lack what we call the physical substance in them. And through digital platforms, they can be traded. In other words, they can be purchased. At the same time, you can as well sell them upon creating one or identifying one on a particular kind of digital platform. So the digital assets that represent a real world object is basically what we refer to as non-fungible tokens. And cryptocurrency on the other side is what we call the digital currencies that can be traded through some blockchains in the digital world. Blockchains basically is like a ledger of transactions that are available online. So non-fungible tokens, commonly known as NFTs, are non-interchangeable units. In other words, you cannot trade or exchange them for another, and they are always stored in a blockchain, which is a form of digital ledger that can be sold or traded. Very, very key to note. On the other side, cryptocurrencies is any form of currency that exists digitally or virtually or uses cryptography to secure transactions. And therefore, NFTs and cryptocurrencies are not classified as assets class or financial assets because they lack what we call the physical substance in them. Now, blockchains, just like you could have your physical money in a bank, blockchain, we can relate it to what we call now the bank. But when you talk about cryptocurrencies, there is lack of that third party in the interchangeability as compared to the physical paper or coin currency, whereby we have the third party like the banks being there for the transactions or the exchanges. In other words, they are decentralized. What I mean, they are not centralized like the physical currencies. That is when I talk about the cryptocurrencies. So it is always advisable to understand the difference between NFTs and cryptocurrencies. So how do NFTs and cryptocurrency work? NFTs and cryptocurrency exist on a distributed ledger. And I said that was called blockchain, which is a record of all transactions updated and held by currency holders. In other words, you could buy or sell an NFT without a cryptocurrency. So NFTs and cryptocurrencies exist on a distributed ledger called blockchain, which is a record of all transactions updated and held by the currency holders. Very, very key to note that point. We have different types of NFTs in the market, even here in Kenya, one of them being so we are sorry for that. There was a network error. Can I be heard now?
Yes, you can be heard, Andiwo. Njuguna,
Right,
maybe you
thank you
can
so
also
much.
bring back the presentation. I think we also lost that.
Just a minute.
Okay. We apologize for that. Kindly be patient with us as we just restore that. Meanwhile, you can just, this is just a reminder to everyone. In the case of any questions that may come up, kindly share them with us on the chat box.
We are waiting for Juguna to share the presentation. So just a minute.
Okay. Maybe Joseph, you can just proceed as we wait for Njuguna to proceed with uploading the presentation. But you
Hope
can
it is
just proceed.
visible.
Yes, it is.
All right. All right. Thank you so much.
Thank you.
So we are talking about how does NFTs and cryptocurrency work. NFTs and cryptocurrency exist in a distributed ledger. When we basically talk about blockchains, what we basically mean is a distributed ledger. And a distributed ledger is basically a record of all transactions updated and held by currency holders. Currency holders are basically people who participate in the purchase and sale of either NFTs or cryptocurrencies. And we have various types of NFTs as well as cryptocurrencies. Some are known to us, some are not known to us. We have under NFTs, we have artwork, where someone with a particular kind of artwork presents it in a digital format as a right. You can sell, you can create the same artwork as an NFT and thereafter sell. And the people in various digital platforms that I'll mention later on will have an opportunity to buy a particular artwork. We have domain names, we have trading cards, we have real world assets, the virtual fashions, as well as music. Not even forgetting the in-games available as NFTs. Then we talk about on the other side of types of cryptocurrencies. The first cryptocurrency to come into being or in place was the Bitcoin cryptocurrency. Any other currency that is now existing thereafter is basically called altcoin. Altcoin is an alternative coin to Bitcoin. Examples, we have the Ether, the Binance coin, we have the Tether, the USD coin, and the Dogecoin. So we have quite a varieties of cryptocurrencies available on various digital trading platforms where someone can buy and sell NFTs and cryptocurrencies. One thing to note, you cannot trade on an NFT without first buying a cryptocurrency. And that particular cryptocurrency that you have to buy first, because the blockchain, the record of all transactions basically for NFTs are in Ether platforms. So it is always advisable to first get to know what an Ethereum is before you begin your trading in NFTs. After that, you can now move around and say, okay, fine, this is the moment to trade in an NFT, or this is the moment to trade in a cryptocurrency. There is something I also wanted to mention before I walk out of this page about cryptocurrencies. I talked about their establishment. Cryptocurrencies was the first to come into being, 2009, the first being Bitcoin. Anything that is existing thereafter is called an alternative. Bitcoin, Doge, there are so many. So buy a digital content, you must first have an account or a trading platform, thereafter buy a cryptocurrency that will enable you buy an NFT. Cryptocurrencies are fungible. They can be traded, they can be exchanged. For example, and they do not lose value across various cryptos. Like one Bitcoin will always be equivalent to one Bitcoin. One USD coin will always be equivalent to one USD coin, no matter the platform you are using, or the trading platform. One Ether will always be equivalent to one Ether. However, when you talk about NFTs, they are non-fungible. So they are not interchangeable. And you cannot really say, for example, one NBA NFT being equivalent to the other. The value is never the same for NFTs. However, for cryptocurrencies, no matter the trading platforms, the values remain the same. To the next slide, why invest in NFTs? Anyone can invest in NFTs. Anyone. Asset ownership, that it is an asset ownership that is tokenized into an NFT. Tokenized in that they have got digital signatures with some unique codes. This basically now gives them the identity and ownership. So anyone can invest in any available NFT. You can create an NFT even today, but the thing remains, the demand of or the sale of NFTs will always depend on the demand. You can create it, put it out there on a trading platform like Binance, but the sale will depend on the demand and the price someone is willing to offer you on a particular NFT. NFT ownership is secured by a blockchain, and therefore using blockchain technology to digitally signify ownership can make an investor's ownership of an asset in NFTs more secure. Then lastly, there is also an opportunity to learn more about blockchains, the digital ledgers of distribution that holds all the information about NFTs. So therefore, investors can become more knowledgeable about blockchain while diversifying their portfolios by allocating a small sum to tokenized assets. So like, for example, if you think of like diversifying your portfolio to invest, to take your investment further to NFTs and cryptocurrencies, it is always advisable to first do a lot of research, just like someone who wants to invest in stocks. Have a trading platform and get to know how the buying and selling of NFTs and cryptos work. Why invest in cryptocurrencies? Because they cannot be printed or seized. Remember, the physical money has got the physical substance, but cryptocurrencies are digital currencies. They cannot be printed or seized, and they also provide a safe store of value. And I talk about the value of a USSD coin on one side will always be equivalent to the value of USSD coin on the other side. The value always remains the same. Cryptocurrencies are viewed to be highly speculative, and therefore no guarantee that they will ever achieve mainstream usage. Then another point on why someone should invest in cryptocurrency. Cryptocurrencies are guarded by several complex security protocols that are carefully followed before buying a cryptocurrency. Then finally, cryptocurrencies have been described as a transformative technology that could revolutionize a number of industries. Just look at 2021 itself in terms of volumes of transactions being into $41 billion. So this is a clear indication of what we should expect in future as far as trading in cryptocurrencies are concerned. I know we may not have really quite sufficient time, but we wish we could, so that at least we dwell so much into the actual trading of cryptocurrencies as well as NFTs. Are NFTs and cryptocurrency securities? NFTs can only be deemed to be securities if and only if they pass what we call the OA test. Otherwise, without that, we will not refer to them as securities, because they lack physical substance. So for them to really be referred to as securities, therefore, they have to pass what we call the OA test. And the OA test is basically a standard to test if a transaction has an investment contract. But on the other side, cryptocurrencies, just like Bitcoin, Ether, are not and will never be securities at any given point in time. In terms of legality of the two areas, we have the identity and ownership of an NFT is verifiable, because they use unique codes in the blockchains. Just like you going to a bank, a winner going to the bank to open an account, there's always a unique account number. The same also applies to NFTs and cryptocurrencies. The blockchain, I related it to a bank. It has got all the information as far as the currency holders are concerned and the creators. So the identity and ownership of an NFT is verifiable through the publicly available blockchain ledger. Owning an NFT grants anyone the right to use the underlying digital asset, but does not transfer the copyright or reproduction right. However, we have replicas on NFT around. Combine it with the other and form another third NFT. But most people today are only producing replicas, not necessarily stealing the copyright of a particular NFT, but just trying to imitate on what others have already done before. The rights can be limited to non-commercial and personal use only, while some NFT licenses allows for commercial use of the digital asset. Like for example, while the Central Bank of Kenya reiterates that the Bitcoin and similar products are not a legal tender nor are they regulated in Kenya. So that is a key point to note. Yes, they are decentralized in the digital trading platforms, as opposed to like the physical currencies, which are centralized, like for example in Kenya, through the Central Bank of Kenya. But you have to note that the CBK reiterates that the Bitcoin and similar products like the USSD coin, among others, are not a legal tender as the physical notes that we have, or the physical coins that we have. Then what are the challenges basically involved in cryptocurrency as well as NFT investment? Yes, it is an opportunity for you and me to venture into as far as diversifying our portfolio is concerned, but you must be prepared for these challenges. One is the legal challenges. Currently we don't have any proper regulation regarding the operation of any NFT in the market as well as a cryptocurrency. So when you venture into it, one thing you must take into account is that should anything happen in terms of you losing your investment, you will not have any opportunity to seek any redress in a court of law, simply because they lack the legal or they lack what we call any proper regulation on how they should be or on how they should conduct themselves. Then we also have the cyber threats and online fraud risk. The popularity of NFTs has also increased chances of cyber threats to the NFT market. Cases have been raised where replicas of the original NFT stores are put on the internet, just the way I say it. You may have a very, very good NFT today created by you, but after like 1 year, you will see a replica. Not necessarily stealing your copyright, but imitating basically what you did to create that NFT. Challenge of considering NFT as security. We mentioned earlier on that they are not security unless they pass the OA test. And therefore, this is a challenge as far as NFTs are concerned. They cannot be considered as securities. And if they have to be, then they have to pass what we call the OA test. Then intellectual property rights. As an investor, when attempting to purchase an NFT from the market, you should consider knowing whether the seller actually owns that NFT or not. The truth is, it is never known. And at times, for you, that information, because of the replicas, might be so difficult to really identify who actually owns a particular kind of NFTs. Then evaluation challenges are also there. Many people are currently faced by the challenge of identifying the price of an NFT. I mentioned earlier on that you may go to a trading platform like Binance today. You want to buy a particular NFT, or you want to trade in Bitcoin, Ether coin, USSD coin. There's always an evaluation challenges. Knowing how the prices are arrived at, so that you may place your bid for a particular kind of auction. Now, what happens in this situation? You may place a bid, you may be it may be successful that you buy the NFT. But unfortunately, you may lack someone to sell that NFT to. Because I said that will only depend on the demand as well as the price that it is offered at. Investors are currently faced by the challenge of unstable value of cryptocurrencies. The value of cryptocurrencies are basically unstable, and it is not easy at times even to predict the price of an NFT or a cryptocurrency. Then there are always high transaction fees associated with cryptocurrencies as well even as NFTs. You have to pay the content creator 1% when you want to buy an NFT. And remember, there are also taxations. There are also taxes associated with when you make a profit out of a particular sale, then be prepared that you have to pay the taxes. So there are high transaction costs. You want to transfer your profits from one trading platforms to the other, or from a trading platform to your bank, there are always high transaction fees associated with cryptocurrencies, as opposed to these other areas of investment opportunities that we are going to speak about in the subsequent areas. How can investors manage the risk? How can you therefore manage the risk associated with NFTs and cryptocurrencies? I only want to talk about three. One, diversify your portfolio. Invest in multiple cryptocurrencies. Don't stick only to the Bitcoin. Don't stick only to the Dogecoin. Don't only stick to the USSD coin. Diversify into various portfolios, as well as even in NFTs. Understand your reward risk ratio. Reward to risk ratio is how much you can stand to profit for every unit of currency you risk. That is, invest only the amount that you are ready to risk. And I always say on matters investment, when we speak about investment, like when you want to buy, for example, a Bitcoin, even for the first time, or you are already in that kind of business, understand the reward to risk ratio. You may do a 0.2 USSD when you started. In case you win, then go to 0.4. You win again, start call, you win, extending the value, for example, to 0.4, or even again where your investment. In that, you will come to understand what I mean by the reward to risk ratio. Define your entry and exit strategies. Very, very key. Know why you are venturing into an NFT and cryptocurrency. Do an extensive research. If this becomes difficult for you to understand NFTs and cryptos, then you can always consult a financial advisor who has got the knowledge as far as the trading of NFTs and cryptos are. Consider trade quality over quantity. I already mentioned that in the reward to risk ratio. Then finally, in this area, I only want to talk about, like, just in a few seconds, that before you venture into the market or the business or the investment of cryptos and NFTs, please do an extensive research. Consult a professional financial advisor, people who have got the knowledge on how the market basically operates. At this point, my dear audience, allow me to welcome my colleague.
Yes, thank you so much, Andio, for that first half of the presentation. I will take you through the next part of the presentation, that is T-bills, bonds, stock investment as opportunities that you can consider. So when you talk about T-bills, these are basically treasury bills which are floated by the government. So it's a form of, it's a way that the government gets people to lend them money, then the people can get interest on this investment. So T-bills are government securities. They are short-term, meaning that they don't last for long. Usually find that it's about a few days to about a year if you want to invest in T-bills. On the other hand, when you look at bonds, so bonds and treasury bonds are secure medium to long-term investments, and they give you interest payments every half year throughout the bonds period. So when you compare T-bills and T-bonds, T-bills are more short-term, bonds are more long-term. That's the main difference between the T-bills and the T-bonds, which is a good way in which that you can earn extra income for yourself. So these returns are usually very attractive, and that is why you can invest in the T-bills as well as T-bonds. And something to note here is also T-bills and T-bonds can be auctioned regularly, so you can sell it to someone else, and then that person becomes the new owner of that T-bond or T-bill. So as we move to the next slide, we'll take a look at what factors can you consider when investing in these T-bills and T-bonds. So the first factor in any investment that you make, whether it's in NFTs, cryptocurrencies, as Andio has mentioned, or whatever you're investing in, first you have to look at the risk, because there's no investment that comes with zero risk. Every investment comes with some form of risk, which is a key factor in considering your risk appetite, so that you know whether you can invest in T-bills and T-bonds. And something to note when it comes to T-bills and T-bonds, they are considered more safe because they are floated by the government, which gives you assurance that when the time comes for you to be paid, you'll get your money back and you'll get your interest back. So another thing to look at is the interest rate and yield. So the interest rate is very important because this is the main reason that you're investing in the T-bills and T-bonds, because they're giving you something above what you have invested. So you should look at the interest rates to see whether it's something that's attractive to you and whether it's worth you not using that money and actually putting it in the T-bills and T-bonds. So interest rate is very important to look at. Also the price of the T-bills and the T-bonds. Because when you invest in T-bills and T-bonds, there's usually a certain minimum amount that you should invest in. So this minimum amount might cut you off if you don't have enough money to invest in the T-bill and the T-bond. Then you have to look at the specific supply and demand conditions for these T-bills. So the supply and demand conditions are very important to look at because, as I said earlier, T-bills and T-bonds are usually traded, just like shares are usually traded. So the supply and demand could give you a profit. You can decide to buy a bond or a T-bill, then wait for a bit, maybe collect some interest. Then after some time, you sell it, and then you get your money back, plus maybe some profit. And as we move to the next slide, we look at stocks. So when you come to stocks, I know most of you have heard about the Nairobi Stock Exchange, the NSE. That is where the stocks are usually traded. So stock investment is usually just buying and selling of shares. And shares are usually just like buying a portion of the company. You own a bit of the company. So these shares is what we call the stock. So stocks offer an investor the greatest potential for growth if you are looking at something more long-term. So factors that you should consider while investing in these stocks are, first, you have to decide how you want to invest in the stocks. And you can do this through, first, you choose the stocks for yourself, or as Andio had mentioned, you can have an expert do it on your behalf. So you can either do it yourself or talk to an expert who maybe has knowledge about the market and how these things go. And then from there, you can invest in the stocks. Also, you should consider your expected return and how the market is. There's something that we call market volatility. This is how the market changes. You find that when you watch the news or you read the business dailies, you find that they say that this stock has gone up 2%, this stock has gone down 3%. So that is what we talk about when we talk about volatility. So the prices tend to change. So you can buy a share, for example, at 5 shillings each. Then maybe after 6 months, 7 months, you find that it's worth 7 shillings. You can decide to sell it at that point, or you can wait in anticipation and sell it at an even higher price. So also you should look at setting your budget for your stock market investment. And usually this you do it by considering how much money do you need to start investing in the stock. Sometimes you find that when a company floats its shares in the market, there's a minimum amount of shares that you should buy so that you become a shareholder. So how much money do you have? How much are they asking? Also, you should look at your whole portfolio and see what percentage should you invest in stock. As Andy had mentioned earlier, it's important for you to look at your portfolio and see how much do I invest in this, how much do I invest in this, so that you don't have all your eggs in one basket, so that if one thing fails, you don't lose all your money. Also, as I talked about in the beginning when I was talking about stocks, it's more of long term. It's not something that you buy now, then you sell now, because you find that the price changes are usually very, very small. So you have to look at the company that you're investing in and see whether it has a future prospect of giving you greater returns. Also, you should look at your ability to manage your stock portfolio, because you can buy shares for as many companies as you want, but are you able to monitor all of them by yourself? Do you have that time to monitor all of them and know when to buy and when to sell? That's something that you should consider before investing in stocks. And as we move to the next slide, we find that we are looking at the types of these T-bills, T-bonds, and stocks. So T-bills, as I said earlier, are short-term investment. So you find that we have 14-day treasury bills, 91 days, 182 days, and 364 days treasury bills. So you find after 364 days, if it's a 364-day treasury bill, it has already matured. Then when you look at bonds, we have it's more of long-term investments. We have municipal bonds as well. Municipal bonds could be floated by the state and the different counties, and that's what we call municipal bonds. Corporate bonds floated by corporates, and government agency bonds. When you look at stocks, we have a common stock, that's just the regular stocks. Then we have something called preferred stock. So preferred stock is something that gives you more dividends, but it does not give you voting rights as a shareholder. Then we have domestic stock, which is, for example, stocks in the NSE, and international stocks like the JSE and maybe the New York Stock Exchange. And as we move to the next slide, we look at these merits of investing in T-bills, bonds, and stocks. So bonds tend to be less volatile and less risky, as I had mentioned earlier, because they are backed by the government. Also, the interest rates on bonds and bills often tend to be higher than saving rates at banks. So instead of just putting your money in the bank, you can decide to invest in T-bills and T-bonds and get your interest, which will be higher than just putting it in a bank or a circle. Then this helps you diversify your investment portfolio, as I had talked about earlier. So it's something that you can add in your investment portfolio. You can have cryptocurrency, you can have T-bills, bonds, stocks, rights. It's a good way to diversify your investment. So bonds usually tend to perform well when stocks decline. So you find that when you have diversified your portfolio and you have shares in your portfolio as well as bonds, you'll find that bonds tend to perform better when now the stocks are going down. That's why we talk about diversifying your portfolio. Then stocks usually offer long-term returns, as I talked about earlier. So risks associated with T-bills, bonds, and stocks investment. These risks are things like low liquidity in some bonds, which cause price volatility. As we talked about bonds, we talked about bonds being more of long-term. So you find that, for example, a 25-year bond, that means it is less liquid because you can't liquidate it and get your money back. You have to wait till the maturity. Then also T-bills are associated with low yields, as well as interest rate risks. and inflation risks. So when there's inflation, you find that it can affect your investment, and perhaps you don't get as much money as you had hoped for, or sometimes you find that you can go at a loss. So you have to look at the interest rate that is being offered and whether it covers inflation and future value of that money that you're investing. So when you look at stocks, stocks are usually associated with things like commodity risk. Commodity risk is something very key because it's the goods that are being sold by the specific company that you have invested in. They can fluctuate, and this can cause the stock price to change, as well as legislative risks, which is the government legislations, laws. They can come in with new laws that can affect your investment, as well as headline risk. You find that companies that have scandals mentioned in the papers, you find that almost immediately their stock starts going down as everyone is selling that stock to get rid of it so that they don't lose their money. So those are some of the risks involved in stocks. Also, bonds are associated with market risks and inflation risks, just as I talked about earlier. So in the next slide, we'll come to another interesting investment opportunity that we call real estate investment. I'm sure all of you have heard about real estate investment. So real estate investment is usually the purchase and management and sale of rental or real estate for profit. So for example, you can buy a house, then you stay for some time, then you sell it, or you can buy a house, decide to rent it out, or you can buy a piece of land, then decide to develop it, and then sell the development. So we have different categories of real estate investment depending on their type. So we have residential property investment. This is usually property that is made specifically to be residential. So it's property that people live in. That's what you talk about when you say residential property investment. When it comes to commercial property investment, this is usually buildings like malls, buildings like office space. These are used for commercial purposes. When you talk about industrial property investment, this real estate is used for industrial purposes like go downs, as well as factories where they produce goods. So those are the different types of real estate investment that we have. So one question that you have to ask yourself, is real estate a high or low investment risk? So as I talked about earlier, any investment that you make comes with some sort of risk. So the type of real estate investment that you choose is what will determine whether this investment is high risk or low risk. So it is usually advisable as an investor to find the right balance of risk for yourself, because different people have different risk appetites. There are some people who don't mind risking their savings and investments, and there are some people who are more moderate or less risk averse. So you find that people are different. So that's something that you really have to look at when it comes to any type of investment. Another form of investment is what we call high yield funds. So high yield funds are mutual funds or exchange traded funds, ETFs. So these ETFs, they hold stocks that pay above average dividends, bonds with above average interest payments. So in the market, you find that ETFs, they pay above what is offered by other people in the market. That's what we call high yield funds or exchange traded funds, ETFs. So when you come to Arima fund, you find that Arima fund falls under this category because it is privately offered and pays above the market average. So Arima fund falls under this category. So some high yield funds operate as special purpose vehicles, SPVs. This is because they are intended for a specific purpose. This could be real estate development, or maybe some other development that requires huge capital outlay. So high yield funds, most of the time you'll find that they're specific purpose vehicles. They are for a specific reason. And sometimes you find that after this reason is accomplished, then the fund is dismantled. And as we move to the next slide, we'll look at the examples of these ETFs that we mentioned. So first we have the equity ETFs. So equity, just as you know, refers to stocks and shares of a company. So this ETF is invested in equity, in stocks. So this could be large businesses or small businesses. So that's what we call the equity ETFs. And at this point, I'd like to remind our audience, in case you have any questions, feel free to continue putting them in the chat box, and we'll answer them at the end of the presentation. So another example of ETFs, you find that these are bond or fixed income ETFs. So these are ETFs that invest in bonds. Then we look at currency ETFs. These are ETFs that invest in currencies. We have the foreign exchange. So you find that they are specifically there just to invest in currencies. Then we have commodity ETFs, and commodity, as I had mentioned earlier, refers to goods. So these ETFs, they invest in physical commodities. This could be maybe in the agricultural sector. This could be gemstones. There could be diamonds. There could be oil, gas. These are ETFs for commodities. On the next slide, we look at the benefits of real estate investments and high yield funds. So the benefits of real estate investment are real estate investment trusts. These are usually referred to as REITs, R-E-I-T, REITs. They offer a way to invest in real estate without having to actually own that piece of building or property, or to operate them, or to finance them. So REITs are a way that you can invest in real estate without actually now owning a piece of land and developing it, and maybe letting out that apartment that you've built and managing it. So it's an easier way to invest in real estate. Then we have other benefits, like it gives you passive income. You get a tenant who gives you rent every now and then. So that's passive income for you. And it gives you a stable cash flow, because you know at the end of the month, I expect this much in rent, and that gives you a stable cash flow. Also, it's a good way to diversify your portfolio, as I said earlier. And also it provides you financial security as an investor, because at the end of the day, you know that I own this property. It's not going anywhere. And it's something that if I want, I can decide to sell, I can decide to let it out, and it gives you some sort of financial security, as well as tax benefits, because you find that sometimes you have tax exemptions on rental income up to a certain amount. So on the other hand, when you look at ETFs, you find that these ETFs offer a standard merit of professional portfolio selection and management. So it's a good way to diversify your portfolio, as I had mentioned earlier. So ETFs provide a viable alternative to both equities and more conservative fixed income instruments for investors who are seeking higher yields. Because this is something that I had mentioned earlier, ETFs offer above the market interest rates and yields. So it's a good way for you as an investor to actually get returns for your investment. On the next slide, we'll take a look at what risks are associated with real estate investment. As I had said earlier, all investments have risks. And for real estate, we have the lack of liquidity. Lack of liquidity basically means that you cannot liquidate that property. You cannot actually sell that property. For example, let's say today you have an emergency and you need money urgently. You can't just take that flat and actually sell it within maybe a day or two. unless you really put down the price to a throwaway price, then you can be able to sell it. So you find that real estate investment is not as liquid as other forms of investment. Then you have real estate market volatility. So the market changes. You find that market prices can change. One time it could be high. Another time you find that the price of your property, the value of a property goes down. So that volatility could affect your investment. Then we have bad tenants. As an owner, you find that you've let out your apartment or house to someone, but then you find this tenant perhaps is not consistent in paying their rent, or sometimes people escape with rent, which could actually affect your investment, and it will cause you stress, financial stress. Then we have structural risks. So these are risks related to actually the financial structure and rights that it provides to the individual participants. So you find that the way it is structured could be risky to you. Then we have physical asset risk. This risk is involved with the building itself or the property itself. You find that cracks could come about. Then you find that the value of the property will go down, or perhaps repairing those faults in the property could actually cost you dearly. So real estate, all in all, is just like any other investment. So in any investment, I'll reiterate again that you have to look at the risks involved. Get to understand that investment that you are going into. If it's NFTs, really understand how it works, how people sell it, when do people sell it, when do people buy, when is the good time to buy a share or a stock, what kind of real estate investment do I want? Do I want to invest in real estate investment trust, or do I want to buy a piece of land and prospect and sell it afterwards? So there are a lot of things to consider in any type of investment, and that's why we're having this webinar today, just so that you can be more knowledgeable and get to know the different types of investment and what to actually look at when it comes to investment. And that is the end of our presentation for now, and we welcome any questions. I'll take it back to Christine, our moderator, and thank you, our audience.
Thank you, Njuguna and Andiwo, for the beautiful presentation. Maybe at this point I can be able to take questions. There was one question that was shared with me on the chat box. Maybe I can allow David to take it. The question was, how does the metaverse and NFTs relate? How do you see this penetrating the African market? Being that especially the NFTs, major players are famous people, where does a common person fall in this? David, you can take this question. David, are you there? Someone can help David be unmuted. Mwendwa, are you there? You can help with this.
Thank you so much. I think for me, this question is quite patent in terms of where are we now and where are we heading? Because at the moment, when you look at the metaverse, ideally, when someone asks what's the metaverse and how an NFT is related, metaverse actually virtual reality being intertwined with actual reality that is with us right now. And we've seen companies that, especially in America, trying to interact that, and this just tells you that the rise in NFTs as the rise in NFTs as an option for investments tells you that it's an opportunity that is it's a new frontier. We've seen regulations that markets are trying to regulate, countries are trying to regulate, see what kind of regulations that can come on board to ensure that these regulations work in place with various companies and various governments to ensure that, as a recent thing, we've seen that in terms of even South Africa, I think it's South Africa or Nigeria, they've actually allowed things like cryptocurrency to be used as a currency with some particular allowable regulation. That tells you that cryptocurrency and metaverse in terms of virtual reality being augmented to real reality is coming up, and this is the future that you're heading into. So the question is, even with the major players, you can say big names, but I would say that even for the person who drives an economy, example, the person who drives the metaverse or the cryptocurrency are the common people. They're the ones who invest in it and it grows. And for that main reason, I would say that our part is to just choose which investments are valid, analyze, assess, and see which investments are valid in terms of cryptocurrency and other asset classes, and see which one works best for you. Thank you.
Thank you, David, for the elaborate explanation that you've given to that answer. I hope the person who asked it is well satisfied. And I hope we've all learned from it. Another question, are there some threats posed to cryptocurrencies to the financial sector in future? David, you can take this. Are there some threats posed by cryptocurrencies to the financial sector in future? Mwanda, you can assist with the meeting.
Thank you so much. In terms of threats will always be there. Being that it's a virtual currency, there's also opportunity of cyber threat and cyber security. And also there's the issue of also accepting the markets. Threats will always be there, and also with the acceptance comes regulations, and this is one of the major opportunities of threats, because I will say a threat is also an opportunity, because you're seeing a lot of with the way the economy is going and the world economies are going right now. We're seeing that the threats are there, especially in terms of regulation, number one, which regulations are okay with it. Number two, in terms of how do you vet? And number three, the issue of cybersecurity in terms of it's a cryptocurrency. What kind of security levels are there to ensure that you don't lose your funds? And this is some of the threats that are live to us, and they are live right now. And as we go on, you're seeing regulations that are being formed to just guide and ensure that it's totally taken care of, and see any other things that might come about that is also unforeseen that maybe might come up. But ideally, threats are there. The only thing is, my advice is seek a financial advisor or someone who's an expert in that to guide you to ensure that you jump through the loopholes of threats that are available, and also regulation that comes into play. You can also understand the regulations that are actually in place right now to guide such investment instruments. Thank you.
Thank you, David. Maybe I can take one or two more questions from the participants.
Yeah, Christine, I can see I have a question directed to me here. So the question is, aside from NFTs and crypto, could you tell us more about government bonds? We have heard the governor-elect, Nairobi, saying they will have bonds for infrastructure matters, e.g. for the transit trade metros. How do I, as a common mwananchi, get to invest in this, and is it viable? So when it comes to this kind of bonds, you find that they are municipal bonds, and these bonds are something that you can invest in, and they are viable. I see that you asked whether they are viable. It's a viable investment opportunity, and as I said, bonds and bills are usually more secure because they are government backed, and they're usually paid on time, and they don't have as much risk as something like NFTs and cryptocurrency. So it's a good way to invest, actually. And you get to be part of the development of the county as well as the country as a whole. Thank you.
Thank you, Joseph, for the well explanation you've got, the good explanation you've given to the question. If there's no other question, I think at this juncture we can just we'll end the webinar. Thank you so much to the participants for making time to attend this forum and learn as much as you can. Thank you also to the Arima team for also the presentation as well. So I think without further ado, thank you all. I can see one more question. How do you invest in government bonds? Before we can finalize on the webinar presentation and the questions, Njuguna, you can take this. How do you invest in government bonds?
Yeah, since we don't have much time, you can always take our contacts, and we'll actually take you step by step on how you can actually create your own account and invest in these government bonds. Thank you.
Thank you for that, Njuguna. So I think we've come to the end of the webinar. Thank you all for your time and also for the presenters for giving us a good presentation. I hope we've all learned something about NFTs. If as per the team, we can be able to share the presentation to the respective email addresses for those who registered with us. So once again, thank you very much and have a good day to everyone.